Welcome, everybody, to the Chinchilla Pickin' Podcast. It is November the 10th, 2022, 5:45 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I am here with Brandon Beaver. Brandon, how are you tonight, man?
All right. I'm doing all right.
I,
How about
I'm. Go ahead, man. You
yeah,
first.
just I mean, all I've been doing is sitting, doing some research today and watching and listening to CNBC. Played a couple video games. Did some things around the house, had to go out, run some chores, and come back here and do the show.
There you go, man. Show's best part of the day, right?
Yeah.
Right. And right after you checked your email, Brandon Beaver at chinchillapicking.com. It is a real email. You can email him tons of
It
stuff.
is. You won't get
And
anything back because I don't remember the password to it. Maybe I'll spend some of my free time this week looking into my password so I can actually log into that email.
so I have not been on StockTwits today, but I guarantee you there's a bunch of StockTwits people saying to the moon and rocket now and going ape crazy.
I didn't even
Um,
think about that. I really should have done the worst things I read on StockTwits today.
that would have been a great segment today, but I'm sure everybody's going crazy. But the question of the day is: does this signify the end of inflation? And my answer is, it is too close to call.
It is too close to call.
So,
Answer's no.
all right. So before we get into it, let me go over the rules. Rules. Everybody knows the rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. We actually do not discuss it. You're here to live discussion back and forth here on the show. And Brandon's going to lead us off tonight. I know I just segued into it, but I will also want to put a reminder out there. I try to do this every now and then. If you like what you're hearing, go ahead and hit subscribe and tell other people about it. That's how we grow organically. And if you're our 1 to 3 listeners in Switzerland that are listening to us, thank you. I would love to come out to Bend. Ben, is it Ben? It's Ben, right? Switzerland, Bern? I don't know. I think so. Bern. My friend told me about it. He goes out there all the time. Switzerland, he says, is a great resort town, especially in the winter. So maybe I'll make a visit, man. But Brandon, take it away, man.
Yeah, I just no, it's too early to call. I have a lot of theories on what happened today, and I think it was mostly computer trading. The 10-year yield just tumbled because everybody piled into it. A lot of companies piled into it, poured a lot of money into the 10-year yield, and it dropped down to 3.81% when it was previously just a couple of days ago over 4%. And I think that in itself just triggered algorithms to go crazy and computers to buy and buy and buy and buy stocks today, and cause people to short cover, which 1,200 point rally on the Dow, up over 5% on the S&P 500. I can't even remember when the last time that happened was. Over 6% on the NASDAQ. What a crazy day. Great time to take profits because it's not over. So let's talk a little bit about what triggered all this. The core consumer price index, the CPI. It excludes volatile energy and food prices. It rose 6.3% in October. That was less than the 6.5% that economists that were surveyed by the Wall Street Journal thought was going to come out. And it was down from the 40-year high that was reached in September. Overall, inflation clocked in at 7.7%. That was down from 8.2% in September. Let's remember, these are year over year numbers. We're lapping high inflation. So last year, October inflation hit 6.8%. So we're up 7.7% from that. I don't see a huge bull case in that, in my opinion. I understand it's slowing inflation. That's fine. And we had some more good news. Core goods down 0.4% from September. That was the first drop since March. There was a 2.4% decline in used car and truck prices. Medical services fell 0.6% from September. And that was the first decline since June 2021. So there was some good news in that. Go ahead, Dave.
All right. So you're talking month-over-month declines. That's great. You're talking month over month at the core inflation number percentage
Yeah.
that we have grown and inflation has come down. Yes, that's good news. Do I believe it's a 5% rally in the Dow? Good news? No, maybe a 1 to 2%. I think this is overdone. Like you said, it's more of the computer systems took over after heavy trading started today. Everybody was overjoyed with the rush. We need to see a lot more ground in inflation before I believe we can say mission accomplished.
Yeah.
I don't want to be on board a aircraft carrier and say mission accomplished when we're not done yet.
And to be fair, it does need to be a slow decline, but
Well, I mean, yeah. So I want to paint the picture of what I'm talking about. Yes, I want to first of all admit that yes, it was good news. But I don't think it's worth the rally we had today. And here's why. Here's my case for it, Brandon. I know you have some thoughts and I have thoughts. We'll go back and forth here. You were talking about last year we had 6.8% inflation at this time, and now we're at 7.1% inflation. So in 1 year's time, we have not gone down, we have gone up.
Yep.
If you want to look at it from that perspective as well. Also, in 1 year's time, CNBC, if you go onto their website now, CNBC is has typically been in trying to, they typically have they typically try to make the case for the good news on inflation. From what I've seen so far, they don't like to report the bad news unless it's actual. They can't defute it or twist it, and they have to report it because it's the news. So they had a chart on there, which I was surprised to see them put this out, and it was like the year over year increase in how much these certain things have cost. So at the top of the chart was food at school or work, like say a work cafeteria or school cafeteria, someplace like that. That's up 95% over the last year. So if you have kids, which I do, and you have to pay for their school fees, I do, it is up over 95%, and I agree. I mean, you have airplane fees and fares that's up over 35% since this exact time last year. Food in general is up over 25%. Now, here's my concern with this is let's take Kroger, right? Take a company like Kroger. Inflation's going up, right? So they have to raise prices because they have a very slim profit margin. Grocery stores typically do. And so they got to raise prices on that loaf of bread. So say this loaf of bread was $1. Now it costs Kroger $1. They're selling for $1.20. Well, now that Kroger's paying like $1.10 for it, Kroger's got to raise it up to $1.30. Well, with every single higher, if everything else is costing more money, someone might come in and say, you know what, I don't need bread this week. I don't need this week. I could go without this. And so now Kroger's little tiny profit margin, people are buying fewer items. Kroger's making less money, and this hurts them. And it's because they have such a tight, thin profit margin. This goes back to an episode you talked about earlier this year where you said in moments like this, you need to look for companies with good profit margins because they're going to be able to withstand and eat the difference and continue to grow, such as you pointed out, companies that make cell phones. Well, the average cost of a cell phone year over year has actually gone down by 20%. The average cost of a TV has gone down by 30%. There are some things where the average cost has gone down, but most things the average cost has gone up. Brandon, I know you have thoughts. Go ahead.
Yeah, and even with the things that are going down in price, when it comes to iPhones, for example, or TVs or whatever, you can look at companies that have pricing power. I'm not sure that any company has pricing power in TVs, but as far as iPhones go, I mean, Apple's down for the year, I think. I don't know after today. I didn't look at it today.
It's
But
probably up today.
The last time I know, but I'm sure it was up today. It would I think it had its best day in like 2 or 3 years or something like that. Apple did, but it's outperformed the S&P 500 by a lot this year, and that's because they've got I think it's $95 billion in cash sitting aside. So people look to Apple for safety because they can survive a recession and they can survive the high inflation and stuff like that. So in my defense, when I was talking about, buying these good companies, it makes sense to buy the good companies that has the cash on hand going into inflation. It also, if we ever go into a deflationary environment, makes sense to buy them then too. All markets, it makes sense to buy them when they're at a good value. And you get those good values. I think today is a good example as to why when something goes down, as much as like Google did last week or Amazon, or even Meta at that point. Sometimes you got to shoot first, ask questions later, because all those opportunities I was talking about legging into last week, those opportunities are over with for now. Now the good news is you're probably going to get another shot at them in the coming months. But once you get the value, it doesn't really matter what your view on the macro picture is. If the micro looks good, you buy it.
That's true. That's true.
So
but as far as and I want to bring this back to inflation here. I agree with everything. Go ahead.
Let me go into inflation. Let me just say this one thing. Instead of trying to time the market, if you're investing for the long term, you really just need to look at fundamentals. They'll guide you. Go ahead. Let's get back into inflation.
And you're right. The fundamentals will guide you here. I lost. So of course I'm just computer illiterate. I had my page up, and then I lose my page. So oh well. Yeah. Now I can't find it.
Amazon had 13% gain today.
13%, but they're still not like where they need to be.
No, but sheesh, like wild for the entire NASDAQ.
I can't find it. I had this really cool thing here, but oh no, here I found it. Look at this. I had lost it and I found it. I'm not good at this stuff. I need someone to teach me how to computerize.
Computerize.
That's a joke, people. That's a joke. All right, guys. So I want to go more of these numbers. So year over year, the price of eggs is up 43%. Year over year, the price of butter or margarine is up 33%. Health insurance, which something everybody has, is up 20%. Utility piped gas service up 20%. Roasted coffee, that's up 15% year over year. Some of the things that have gone down: beef and veal have gone down by 3%, apparently. Computers, peripherals, and smart home assistants. I need one of those. Yeah. That has gone down in price 3%. Admission to sport and events has gone down in price 17%. So, there are, like I said, there are some things that are moving in the right direction. Most of these things are not. Everything else is bad. But the point I'm trying to make is there's so many different things that have gone up in price year over year. And the average, wage increase, is only what 3 to 5% year over year on average, an annual rate raise increase for the average worker. That's not enough to keep up with that. No, that's not enough. That means people today have less money to spend than they did a year ago. And I don't understand how we're still having to spend. And besides the fact of things like a firm, which I think is, bad, that's where people are. That's how people are keep their spending going, is by using these credit services. They're going to end up owing money and they're not going to be able to pay it. And now we have the subprime crunch that we've talked about.
And what's going to happen if deflation does kick in? And I think it will. I don't think, we can argue and go back and forth about whether we're in a recession right now or not. But I think by this time next year, it will no longer be arguable.
I think we'll be getting out of it by this time next year. We'll already be getting out of it, dude.
Well, I mean, okay, so if we're getting out of it, it will still be no longer arguable that we were in a recession, because I think it gets worse before it gets better. And I want to reference everybody back to our podcast that we did last year. I think it was in December, on the characteristics of a market cycle, and go back and listen to that, and you'll see where I'm coming from as to why I think we're in a recession and why I think we're going deeper before it gets better. Back then, I told you it was the end of the bear market. It was the end of the bear market. I was right, and it was all because of a book I read and referenced in that podcast. So go back and listen to it. Beef and veal, though, back to what you're talking about, that really doesn't surprise me that much that beef and veal were down, because everybody was grilling out during COVID. So everybody was buying up the beef and veal 2020 and 2021. So it makes sense that's come down a little bit, really.
Right. And hold up, I also want to mention this around the topic, a little side note, little trivia for you guys, if our listeners here right now. I don't know if you guys are aware, but back in the 1980s, there was this mad cow disease in Europe and Great Britain.
90s. It was the 90s, I thought.
90s, yeah, 80s. And if you were around in that time, you were not allowed to give blood here in the United States. I have not been allowed to give blood in the United States because I lived overseas during that time. And so all of a sudden now you have zombie deer here, which is the exact same virus that was in mad cow disease in Europe. So now all of a sudden America's like, well, it's already here. Never mind. You can get blood. I just find that funny.
What
But
is
go ahead.
zombie deer? I know it's not a
Yeah,
medical podcast, but
that was like a year ago when zombie deer was a thing, and you can see pictures of it. But it's the same virus that was mad cow disease back in the 80s in Europe.
okay.
Anyways, we just got on beef, and it made me think of that, and I have no idea why. Back to stocks and investments now. Let's go back to our subject here.
So
you had next. What'd you have next, man?
Yeah, let's go into this is a bad transition, but whatever.
We don't need good
transitions. I want to talk about
we are amateurs.
Yeah. I want to talk about the FTX situation, because if there's ever a situation that made me want to cuss on this podcast, it's this one. Warren Buffett one time said that when the tide recedes, you see who's swimming naked, and there's never been a better example, in my opinion. So FTX which is a crypto exchange. They had lent billions and billions of dollars of their customers' assets. And this is an exchange, right? It's not a bank. It's not an investment firm. This is a crypto exchange that is supposed to make their money primarily by charging trading fees, not lending their customers' assets without the customers knowing about it, which is what they did. They lent billions of dollars to Alameda Research, which happens to be another company that is owned by the same CEO of FTX. And when Alameda's Research's risky bets went underwater, FTX went underwater. And now you can't withdraw your money from FTX as a crypto exchange because a lot of it's gone. So, Chief Executive...
Hold on. I'm going to interrupt you here. As of right now, you can still withdraw your money. Now, once they run out, they run out.
So no, there's people on Twitter right now. There's a guy saying that he just lost $11,000. He can't access it at all. They stopped withdrawing because a lot of people went like sort of what they would do during a bank run in the old days. They ran and tried to withdraw their money, and now they can't do it. They froze withdrawals at FTX.
So I've been following this story, and it was as of this afternoon, early this afternoon, they were still allowing withdrawals. So that could be someone trying to get fame on Twitter, or they could be someone actually being correct. I don't know.
So all in all, FTX had $16 billion in customer assets. $10 billion is owed back to Alameda. It's probably not going to get paid back. It's probably gone. FTX lent more than half of its customers' funds to Alameda, is what it says, according to the Wall Street Journal. FTX then paused customer withdrawals earlier this week. Maybe they've resumed it. Maybe they have resumed it, because I read that they paused it. And it was hit with $5 billion of withdrawal requests on Sunday. They scrambled for an emergency investment. Initially, they found it in Binance, but Binance backed out of that yesterday and said that these problems are so deep and so great that we can't fix them. There's nothing we can do. So they backed out of that deal. The CEO went to Twitter and said, FTX has enough to cover all client holdings. We don't invest in client assets, or we don't invest with the client's assets. But then he deleted the tweet because he's apparently lying here, and hopefully he could go to jail for that. I don't know, but I'm sure that's probably why he deleted it, because he was lying. So let's go through some well-known institutions that invested in FTX. $900 million came from SoftBank. Sequoia Capital had invested, and a third-party private equity firm, Thoma Bravo. Go ahead.
All right, so there's a couple points I want to make here. First of all, SoftBank invested. Well, Matsumoto, he invests in a lot of risky things. Yeah. He's got the money to lose, but he's very risky with his funds. But some turn out really well. But I would say 7 out of 10 either break even or loss for him. But those 3 that make it are big. But first of all, what this is, Brandon. This is a problem with what happened in the crypto market. You had a number of mostly young men, and by young, I'm being relative because I'm over 40, so young men to me is like early 20s, who had got lucky and invested in crypto and were doing well and decided, and they were somewhat internet savvy, so they created these websites, and a lot of people jumped in during the crypto craze of 2020, 2019. And the lead up to it when Bitcoin first started doing it about 2018 when Bitcoin first started making waves, 2018.
Yeah.
And around that time, and so all these young entrepreneurs thought, hey, I could kind of do whatever, I'm worth billions now because I invested early. I must be incredibly smart. I must be incredibly intelligent. I must be someone who is above and beyond everybody else. And it's what we call like the God complex, is when you have one thing that does really well for you, you think you could do all things really well. And the problem with that is what they found out is that these guys were not businessmen. They were not business savvy. They are not smart with how they use their money. They got lucky, really, really lucky in one area, and used that to compel them to open a website that, there wasn't a whole lot of websites out there. So everybody just went to these handful of websites, Binance, or FTX or Coinbase. There's only a handful that people knew about. So people went to those. So the ones that were up and running, they made a lot of money really fast. So again, they think they're masters of the universe and they could just do whatever they want. And the problem is that when they start actually trying to run a company now that has billions behind it, and they start thinking that they could go ahead and be just as lucky with their investments as they were with cryptocurrency back in 2015, and they realize that, okay, I was just a one hit wonder, and now I'm reaping the results of my rewards. I'm not a smart overall investor.
This guy, Sam Bankman-Fried, he got so cocky that he once said that he was going to buy Goldman Sachs by himself.
But I mean, so I didn't even know about that quote, but everything I said up until you saying that quote, doesn't it make sense hearing that quote?
Makes 100% sense. Yeah. So, I mean, a lot of people were saying that he was the new Warren Buffett. The guy bought 6% of Robinhood. Okay. He's not the new Warren Buffett.
All right. Yeah. So, I mean, that shows you his investing prowess. So, I mean, like, look, seriously, all credit due to him. He was smart and got in cryptocurrency early and invested money. Very smart. I give you that. But you have to understand your own abilities and understand, hey, I got really lucky with this. Yeah. I need to take my time with how I use my money I made off of it and not just throw it around frivolously.
And don't go using customer assets to invest in other things when that's not what you're supposed to be doing with the money.
Yeah, where's his lawyers? Where's the people that he should have hired? Like, all right, here's the first thing I would do, Brandon. If I could go backwards and be 24 again and come into a ton of money like this kid, I would hire smarter people. I would follow Henry Ford of the 1910s and hire people around me who are smart that can run the company, because, Henry Ford said, hey, I'm the dumbest guy around, Ben, but I hire smart people.
Yeah.
Right? I mean, and that's what he did. He understood his own limitations and he hired the people to put him in place to run the company right. And that's what he should have done when he came. Was it Friedman? When he came into all this money.
Yeah, Friedman.
But that's the problem, is that, like, when people especially when young men, unfortunately, I don't know, maybe I'm going to be called out for being stereotypical here, but when young men come into a lot of money like that, they think that, I did this, I can do this again. I know what I'm doing. I can rule the world. And it's like, no, you hold on. You did very good. You did very well. I'll give you all the credit in the world, but you need to slow down and reevaluate things and find out where your opportunities are and where your challenges are, and then focus on getting the right people in place to help you with those.
Right.
And that's all that I see when I read all these articles I read today about this issue. That's what I see. Unfortunately, they are going to go bankrupt. Unfortunately, they are going to lose all this money for a lot of people, and it's going to stain the name of cryptocurrencies, which I don't like to see because I don't. I personally like having a cryptocurrency account. I got some Bitcoin, and I got it into cold storage right now. And I like having that there because it's a hedge against the governments of the world. And I could go take that Bitcoin, and I know in most countries I could find some way to sell it for that country's currency.
Well, now a lot of those governments are going to take this and run with it and use it as a tool to regulate the cryptocurrency industry. And there's probably some regulations that would do really well here, but do we really trust the SEC to enact effective regulations that don't punish us as regular everyday people that don't break the law?
I think the biggest winners of this are the two ones who have jumped through hoops, developed systems, and have followed more than what they were required to as far as rules because they understood that regulation was coming. And that is Coinbase and Crypto.com.
Yeah, and Coinbase.
Those are going to be the two winners.
Coinbase has zero exposure to FTX.
Yep.
But yet they got hit like 10%, I think it was, off this news. So,
I just checked the chart just now, and they're up for today. So
well, for today, yeah. But I mean, when this happened, I think they took about a 10% hit. It would have been a great buying opportunity if I would have known it when it happened. But as far as Bitcoin goes, it's a short-term black eye, but it doesn't really, affect a bull case for me at all. In the long term, I think that Bitcoin and the reasons for owning Bitcoin still exist.
Well, here's how I look at this. Like every single time I hear a story about, hey, 10,000 Bitcoins have been stolen and we're never going to get them back because they're gone, right?
Yeah.
I look at that the same way as a company that is buying back stock. Now there are fewer shares available in the world, and I own a few.
Yeah, right. That's true.
Every single time you guys out there in the world, you hackers steal some Bitcoin, my shares become more valuable because there's fewer of them out there.
Yeah, that's not bad for you. Not bad for you as long as you're secure.
It's in cold storage right now, buddy.
Yeah,
it's not gonna be insecure inside. Plug that USB drive into a laptop somewhere or a computer and bring it online again.
So the whole bull case for Bitcoin still intact, and it's probably going to happen more. Maybe not more often, but it's going to happen more. This is something that happens with any new industry or new technology or anything like that. Then you get some fraudsters that come out and wind up going. One of the reasons why I hate the fact that people watch The Wolf of Wall Street and it made them want to invest is situations like this. Guys like Jordan Belfort, is it Belfort or Belfont? I don't even remember.
Belfort.
Yeah, the Wolf. Guys like that, they always get exposed as frauds. Just like this CEO is being exposed right now, whether he meant to screw people over or not. He's being exposed as a fraud. And if you trade like a fraud and you're immoral and morally bankrupt, it's going to come back to haunt you. Nobody's going to trust you anymore. And the rest of Wall Street will eat your lunch.
Yeah. And I don't want to say like with a new industry, you get fraudsters. Yeah, you do have some of that, but you also get companies that were actually, meant to be good.
Yeah.
But they were poorly ran. They did not have the right people in place. They saw an opportunity for a new industry. They came out with the company, wrong people in place, wrong people running the company, and they go down. It happens. And we've been talking about this. We talked about this on our show last year. We said, there needs to be some thinning of the herd in the cryptocurrency. Well, it's happening, and it's hard to take. It's hard to see, but it needed to happen. Like I said, right now it's looking like Coinbase and Crypto.com are going to be the ones that lead the way out of this thinning of the herd.
So if you pick the right places to put your money, I really you have to investigate these places. You have to investigate your the places that you're trading, the companies you're trading with, just the same way that you would investigate with stocks and stuff like that, and make sure that they're going to remain on the upside and not go belly up. But you were right. Like any new industry, we've talked about this on the show before too. It's just, we've gone into some of the history of when the airlines were first invented. Airplanes changed the world, right? but a lot of the airline companies that first existed no longer exist now. Warren Buffett actually commented, I read this the other day. He said that a good capitalist, if they were alive when the Wright brothers were making their first flights, he would have shot both of them because of all the money that was lost. But yet it still changed the world, right? So if you're good and you pick the right companies and the right, coins and stuff like that, you're going to be just fine over the long haul. But many of these companies will come and go.
Correct. All right, let's move on, man. What you got next?
All right, what I got next here. Interesting situation with the rising interest rates right now. A lot of companies actually have what are called floating rates on their debt. So what that means is as interest rates rise and fall, the interest rates on their debt rise and fall as well. So a few of these companies are scrambling to pay down debts right now because of the fear that interest rates are going to continue to rise. Elf Beauty had 85.3 million in cash and cash equivalents on their balance sheet, which is great, but they're scrambling to start to pay down as fast as possible $88.3 million in long-term debt on its balance sheet as well, and they're trying to do it as fast as possible. DuPont, for example, they're retiring $2.5 billion of senior notes that are due in 2023, and this is going to result in an annualized pre-tax savings of $100 million, so good for them. That's great, but I just wonder, Dave, why these companies didn't start doing this last year. Me and you saw the interest rates increasing back in like August of last year. So why these CEOs are now scrambling when the interest rates have already went from 4 to 6% on their debt is beyond me, and it's quite frustrating to watch it happen. I do applaud any CEO that is saving and putting down as much money on their debt as fast as possible. Anyways, I like that, but why didn't they do it last year? The signs were all there. We all knew the Federal Reserve was going to start hiking interest rates and that bond rates and treasury rates were going to go up.
All right, so you kept asking me, but you never let me talk. I was wondering. I was waiting for my turn. No, it's cool. So you're asking like why didn't you do this last year? Because the Fed wasn't raising rates last year, and money was cheap. Money was cheap. You could get loans, you could get things to pay off these very cheaply. It was very easy to get funds, and it wasn't until we had this year that 2021 2022. What year are we in? 2022 hit, and people and companies had this huge cost savings cost across the board. It started back in the spring with the first round of job cuts that were being announced. Everybody's like, well, that's just a few companies. Look where we're at now. A lot of companies have had job cuts. Major companies have had job cuts. There's job cuts everywhere. Everybody's really dug into this cost savings atmosphere. And that's where we're at right now, Brandon, that corporate companies are saying, look, how can we save money? How can we save money? How can we save money? That's where the pressure is. So they're doing this as an accountant at these companies is like, hey, we can save money if we do this now. But they didn't catch it last year because they didn't believe that it was going to happen. That had to have been it, or they were just too naive and believing that the Fed wasn't going to raise rates for a while and they had time.
Savvy ones were cutting their debt last year in anticipation of all this.
Who?
The savvy ones. I don't have any specific, if there were any savvy ones. I don't know. I'm sure there were, but yeah, I just don't.
Yeah, you'll hear about those savvy ones because they're going to come out with a book in 2 years and then the movie deal after that. That's what the savvy ones are going to do. And that they're going to say, look what I did throughout this whole time. I just got to say, where's our book deal, guys? You know, Brandon and I are the oracles of podcasts, and yet
the oracles of Cincinnati.
There you go. The Cincinnati Oracles, and like people still aren't listening, not as much as it should be. But yeah, I mean, it's poor. It's poor running. It's poor management, and people need to look at all these aspects there and find these different ways to be smart and see things coming down the road, and then make the changes way in advance before it's actually there. But the problem is in corporate cultures, you could call something out, but it could take months and months and months to reach the right people.
Yeah, that's true.
And that's the problem with major, big global corporations is the levels of bureaucracy. Is there's no quick fix turnaround. They're not adaptable and as quick as they would like to be. I'm sure the CEOs and the people who started these companies would like to be very adaptable, but you just can't run a global company that way. You have to have some sort of process, and when you add a process, it slows it down, and that's where you might see some of this, Brandon. And I'm telling you, cash was cheap last year, so that's why they wouldn't have done it last year, and they were just probably naive, thinking the Fed wasn't going to raise rates.
The party's gonna last forever.
Yeah. So the FTX thought that too. So look where they're at.
Yeah. Okay. So the next thing I wanted to get into, once again, bad transition, whatever. Disney reported earnings. They added 12.1 million net new subscribers, beating analyst predictions. And its global total is now at 164.2 million. But losses in streaming were at $1.47 billion. This was 38% wider than what Wall Street expected. Bob Chapek, the CEO, said Tuesday that as far as the streaming business goes, they have reached peak losses now, and the business is still on track to reach profitability in fiscal year 2024. And then he added to that, assuming we do not see a meaningful shift in the economic climate. Unfortunately, I think we are going to see an unfortunate shift in the economic climate. But Disney's goal of achieving profitability might be at odds with its target of reaching 215 million to 245 million streaming subscribers, because how are you going to cut costs to reach profitability when you're also trying to spend to grow?
They raise rates. So I have Hulu Live, and with it, they gave me this Disney ESPN Plus bundle, right?
Yeah.
In addition, and they said it was quote unquote free, but it seems like every 6 months, my rate I pay goes up like $7-8 a month. So it's never free. I'm paying for it, and they're just raising my base Hulu Live rate, and it's frustrating.
And then the guidance was soft. So the 2023 streaming segment operating income was expected to see a growth of single-digit percentage, which is just kind of blows my mind that it's that low, especially when analysts were expecting 34% growth. Analysts at MoffettNathanson, according to Wall Street Journal, said that we've rarely been so incorrect in forecasting Disney profits. So the fact that we were all way off on this, including me, because I bought Disney and announced it on the show, that's the reason why you saw Disney, I think it took a 13% hit in after hours after the earnings report. And it had its largest one-day drop since 2001. So kind of a black eye on me right now, but I still own it. And I still think, people are just punishing companies right now for making investments in the future. And I think that Disney's investment in streaming is going to pay off. Let's not forget they own 2/3 of Hulu. They are going to complete the acquisition completely of Hulu by 2024. And I think combining Hulu and Disney fully is going to make this the biggest streaming platform on earth, even above Netflix at some point.
Nice.
It'll be right there with Netflix if it doesn't go above it. So I'm still a buyer of Disney here. And people were kind of discounting the pressure that the park segment in Asia, especially Disney Shanghai and Disney Hong Kong, felt because of the multiple closures and shutdowns that happened again this year after they reopened. As far as the parks here in the United States go, they said that demand continues to be greater than capacity, meaning that people are trying to buy up more tickets than they could actually supply. So I'm still bull on Disney. Who knows when Asia is going to shape up for them again? At some point, it will.
I tell you what, Brandon, you're doing better on Disney than me. Last week, I said I would buy Tesla at $215, and I am eating crow right now.
Where's that right
eating
now, though?
crow.
After today, didn't Tesla?
It's like 195, 190, somewhere around there. Last time I checked, I did buy, and I am down, and I'm gonna dollar cost average, but I'm not gonna dollar cost average today because it went up today.
It's all speculation based on Elon buying Twitter and,
and
worrying that he's going to not have enough focus to run Tesla, which is probably not true.
But here's the point I want to make with this. Brandon, is like so I bought for anybody listening right now who's a new investor, I bought Tesla. I'm down, right? You would think, okay, you could buy some more at 190, I'm like, no, I bought some more in the 180s. I did DCA a little bit, not much. It's a very expensive stock, but I'm now it's jumped up. I'm not gonna DCA at this level. Why?
Yeah.
Because A, it's moving up, and B, as Brandon and I are talking here, we think this is just a short-term temporary bounce. So I'm gonna wait for it to come back down before I dollar cost average anymore. Now, if it goes back up and I make profitable again, then great. I might sell and get out and take my profit. But in the meantime, that's what I'm looking at. And if you own a company like this, and this situation happens, that's what you do. You don't start dollar cost average as it moves back up and you're so close to being profitable, because that's only that's less than 5% range there for me. So if I'm within the 5%, I'm holding, and I'm going to wait for maybe hopefully a big move.
Yeah, and it's not even, it's down for reasons that are speculative completely.
Yeah.
So Elon said he sold some more Tesla shares too, and if that dropped the price down, just by itself, then fine. But you could also be comfortable at 215 if you're going to hold for a few years.
I tell you what, guys, if you're worried about people and insiders selling, there's a little thing on Fidelity. You could go there. You could go there to news, and here, you know what? I'm gonna go to the spot here. As I'm gonna talk to you guys as I do it. So if you're on your Fidelity site, at the top it says news and research, right? Then you click on news. So you're gonna go there. It's gonna take you to your news section. Then you're gonna scroll down. You're gonna see where it says company news, right? So you click on it, more company news, and it breaks down all the lists of the company news. In this section, it tells you all the insider sells that happened that day. So it tells you of every major company that's out there. It's going to let you know who's buying, who's selling. You have KKR Capital, the co-president CIO. He did a insider purchase there of some sales here. Let me. Insider sell Cryo Cell International, insider buy, insider sell Cosmos Energy, insider sell Lancaster Colony, insider sell Everbridge. There's all kinds of insider sells that you can see, buying and selling here. It's all available for anybody to read. Insider sell Honeywell International. Director, chairman, and CEO of Honeywell sold 40,000 shares today.
I'm still a bull on Honeywell, but you know what? Selling today, not a bad idea anymore.
Well, I'm just saying, like, if you really want to play the whole insider sell, there's free ways. You don't have to pay for a service. Free ways to see who's buying and selling. I don't really look at that too much, because I'm looking at the company. I'm looking at the macro of the company, and I'm making my judgment off of that.
And it could be that somebody sold to pay down a mortgage on a mansion they own or something like that.
I don't know. That Honeywell guy, he made $8 million, so it could be paying off his mansion with $8 million. But Brandon, I tell you what, man, final thought. Go ahead.
And then, you know what I use that for? I used to be a bull on Salesforce, and then I switched on that about, 3 months into the show, because I was looking at insider buys and sells on Salesforce. And then I realized that the CEO and a lot of the board of directors had a habit of selling shares prior to announcing acquisitions. And I got really frustrated. So if you got a company that likes to do that, they're really taking advantage of you, and that's not a good thing for a shareholder to see. But if I'm owning, like, for example, Honeywell, and I see, $8 million, but there's no news that comes in the next couple of days, I'm probably not going to care all that much about it, just because I don't know why he did what he did, Same thing with really Elon selling Tesla for Twitter. Yeah, it sucks. But it's not because he thought, he's announced before that he thought Tesla was overvalued in the past, but this time that's not why he sold. He sold because, he's trying to complete the acquisition of Twitter. And I don't think that Elon's going to take his attention away from Tesla unless he feels safe enough to do it with the company.
And that means he has the right people in place. About what we talked about before.
Right.
And that's why that's important in the company. Is it more than just one person at the helm? Because when that one person leaves, that whole company is going to fall. You need to have a set of people that work well together, that can run the company as a group. That way you're not it's all standing on one leg. You
Yeah.
need 4 legs at the table, guys.
This one, another Warren Buffett quote. This was from the last conference that he had, the last shareholder conference, and he said that if he ever walks into a CEO's office and he sees that the person's got dementia and can barely talk, but the company's still running, he says, "That's my guy. That's my guy right there. This company can still work with a
Yep.
with a demented old man that can't think."
All right, let's go into our final thoughts. Brandon, go ahead. You first.
Yeah, final thoughts that you don't chase a day like today. One day does not a market make. One report does not kill inflation. So we're still not through it. And even once we are through inflation, we got the other side, and that's deflation. And we don't know what's going to happen with that. So you don't chase market rallies like this. You use it. If you do anything, you use it to take profits.
Sell the news, right? Sell the news.
Right.
My final thought, I've covered everything I want to cover about stocks and investments and everything going on in markets throughout the show. I want to use this to really complain about a CNBC contributor, a person who went over there and they said, all right, I'm going to try out the Meta Pro for CNBC and give my feedback. Well, she wrote an article, and in the article, there was a lot of complaints about how she went into these multiplayer worlds, and a lot of the people in there started cussing and calling names and jumping on you. And I was like, man, you would really hate playing Call of Duty, wouldn't you? Because that's what a lot of these teenage gamings. And this is so I'm not really complaining about her. I guess I get her point, right?
Yeah.
As an adult gamer, I don't get like hours to spend gaming. I get 1 hour if I'm lucky, and I want to use it playing games, and I don't want to argue with the teenager who just wants to sit there and talk bad about my mom or whatever right? So if anybody from the gaming industry is listening, can we please have a 30+ section without anybody you can't be 30, you can't be 29 or younger to play in that section, for all of us that work all day long and want to come home and all we have is 30 minutes to 1 hour, and we just want to game without somebody yelling at us.
Right. I don't want to get served by a 12-year-old on NBA 2K23.
Exactly. Yes. All right. That's my final thought for today. All right, guys, we hope you enjoyed the show. As always, we hope we've been entertaining, educational, and uplifting, because we want everyone to make money. Have a good night.
Have a good night.